So we are at the differences between the normal loss and the abnormal loss in case of a consignment. A very good morning to all the participants of the webinar from DTRTI Lucknow. I am Arvind Mishra, Deputy Director, welcoming you to DTRTI Lucknow Webinars 2021. And in this webinar, we are going to study Consignment Accounts Part 3 as part of our bookkeeping and accountancy series. We are at normal loss and abnormal loss in case of a consignment. So let us look at the differences between a normal loss and an abnormal loss. The normal loss occurs because that is inherent in the nature of the goods which are being shipped. For example, in case of liquids, it may be a leakage or an evaporation, or if they are perishable goods, then some of them may not remain, they may perish while being shipped. Because there is a life of a perishable good and it has a short life, and therefore normal loss occurs in the normal situation or in the nature of the goods itself, due to the nature of the goods itself. Whereas the abnormal loss occurs because of unforeseen event like accident or natural calamity, etc., etc. Now, normal loss is not accounted for immediately, and normal loss may happen, but it is not accounted for immediately, and this loss does not find a place straight away in the consignment account. And in fact, what happens is that this normal loss is loaded on the remaining goods or the goods which are unsold. So in a way, the normal loss gets accounted for as cost of the remaining goods as and when they are sold. It is not accounted for as a loss directly in the consignment account. Whereas in case of an abnormal loss, this abnormal loss gets accounted for immediately in the consignment account as well as in the profit and loss account. So it finds a place straight away in the accounts. Whereas the normal loss gets loaded on the remaining goods or the unsold goods. And once it is loaded on the remaining goods, it gets accounted for as the cost of the remaining goods whenever they are sold. Because in case of a normal loss, as you can understand, the cost of the remaining goods, the per unit cost of the remaining goods will go up, and therefore we say that the loss is loaded on to the cost of the remaining goods. For example, if 10 items are sent and the cost of the 10 items is 1000 rupees and the normal loss is 1 item, then 1000 rupees will be the cost of the 9 items which are remaining. So the 9 items are the remaining goods and the loss has been loaded on to the cost of the remaining goods. because now when we find out the cost, we'll divide the cost by lesser number of items. Like in this case, we'll divide 100 by 9, so the cost would go up. And therefore we say that we have loaded the cost onto the remaining goods. Now once we have loaded the cost onto the remaining goods, what happens is that when those goods are sold, then the cost has gone up, so therefore the loss will be accounted for. Now since we are loading the normal loss to the cost of the remaining goods, this loading will impact the gross profit automatically. That is how the normal loss is affecting the accounting by impacting the gross profit as and when these remaining goods are sold. However, abnormal loss will not impact gross profit. It will impact the net profit because it is accounted for in the profit and loss account immediately. It is not going into the trading account, because when we say impacting the gross profit, it means that impacting the trading account. Now let us see, insurance companies generally will not cover any normal loss because they know that this is bound to happen, as it is expected to be incurred on each consignment or storage of goods. Whereas for abnormal losses, insurance is generally available. So some amount of abnormal loss will get recovered for the businessman. The next point is that the normal loss is almost certain. However, it may vary from time to time. Some variation may be there, but it is almost certain that that much normal loss is going to happen. Whereas abnormal loss happens because of unforeseen events. It is unpredicted, unforeseen, and is never certain, and we cannot say that it is bound to happen at all. So this abnormal loss goes straight into the profit or loss account, and therefore we make the following entry for abnormal loss. We debit the abnormal loss account and we credit the consignment account. So therefore what we are doing here is that we are ensuring that consignment account is not affected by the abnormal loss, and whatever debit we are passing on to the abnormal loss account, that straight away we will put it into the profit and loss account by crediting the abnormal loss account and debiting the profit and loss account. So here the loss which has taken place, it was part of the consignment account, but we have added it back so that the abnormal loss does not affect the consignment account. In order that the consignment account is not affected by the abnormal loss, this entry is being made. Now, if abnormal loss is recoverable from the insurance company, then insurance company's account will be debited and abnormal loss account will be credited. However, in case nothing is recoverable, then abnormal loss account will be credited to that extent and profit and loss account will be debited. On the other hand, if the abnormal loss is recoverable from the consignee, then we can credit the abnormal loss account and debit the consignee. Of course, as I have just mentioned, that if abnormal loss is not recoverable, then abnormal loss account is transferred to the profit and loss account by crediting the abnormal loss account and debiting the profit and loss account. So these are the entries that we make in the books of account. As we have mentioned, and it is to be clarified, that abnormal loss is accounted for immediately in the profit and loss account and is not supposed to affect the consignment account. Therefore, this first entry is made that we debit the abnormal loss account and we credit the consignment account with this loss. Now let us move to commission. Wherever commission is paid to the consignee, it is a remuneration paid by consignor to the consignee for the services which the consignee is rendering to the consignor for selling the goods which have been consigned. Now there are three types of commissions that can be provided by the consignor to the consignee as per the agreement between the two of them. And these commissions can either be together, they can be simultaneous or they can be separate, which means that either two of them can together be also given to a person, to a consignee, or they can be in exclusion of each. Now let us look at the three types of commissions. The first type of commission is the ordinary commission. The ordinary commission is a fixed percentage of the gross sales that are done by the consignee. So whatever sale is done by the consignee, we add up all those sales that consignee has done and apply a fixed percentage of to the gross sales. Now it will be given, this commission will be given by the consignor whether the consignee is making credit sales or whether he is making cash sales. It is not necessary that this commission will be paid only when he is making cash sales. Because in the case of credit sales, money has not come. But still, even credit sales will be counted for the calculation of this commission. Now, this type of commission does not give any protection to the consignor from bad debts, and this commission is provided on total sales. And if there are any bad debts, then consignor is going to be affected by those bad debts, and consignee will not insure him at all as far as these bad debts are concerned. However, he may make effort on his behalf to collect the payment. There is no doubt about that. The consignee is under agreement to make efforts, but he will not bear the loss of the bad debts if the debt is not coming. Then the second kind of commission that is given to the consignee is called the del creditor commission. And this del creditor commission is given so that the sale can be increased by making credit sales. So if the sale can be increased by doing credit sale, because if a consignee offers to sell on credit, then more people will come and buy the item, because they won't have to make the payment immediately, and they will make the payment after a certain amount of credit period. So it will likely increase the sale, and therefore del creditor commission is paid to the consignee to encourage him to do credit sales also, apart from cash sales. The consignor provides an additional commission here, and this commission, del creditor commission, is in addition to the ordinary commission. However, the nature of this commission is like this, that this additional commission is provided to the consignee to give a protection to the consignor against the bad debts. In other words, after providing the del creditor commission, bad debt is no more the loss of the consignor, and bad debts is going to be the loss of the consignee. And it is calculated on the total sales unless there is any agreement between the consignor and consignee to provide this del creditor commission on credit sales only. So normally it is calculated on the total sales. Now this del creditor commission, when this commission is provided, the consignor becomes insured against bad debts. So he becomes quite comfortable with credit sales. The consignor will not become comfortable with credit sales if the bad debt is coming upon his head, because he is not in touch with the parties who are not paying back. So he will be in a situation of discomfort that he will not be able to do anything about the bad debts whenever they happen. So he wants to insure himself against the bad debts that may happen, so that he can encourage the consignee to go ahead and do the credit sales also. His idea is to sell off his products as much as possible. Once he is getting the del creditor commission, he can tell the consignee, okay, Mr. Consignee, please do as much credit sales as you want, as much credit sales as is possible. Now in that situation, the consignee will do the credit sale to encourage more sale, to ensure more sale for the consignor. But of course, he will have his own view about a particular person, whether he is going to pay or not. So taking that view into account, he will go about selling, doing the credit sale also to those persons who are going to pay him definitely, because he would also not like to incur the bad debt. So he would go about doing credit sales in order to increase his sale, but he would be careful to do credit sales only to those parties who would be paying to him. So this is a situation, this is a win-win situation for both of them, because consignee is selling to the parties, and therefore he knows the parties very well, and therefore he would like to decrease the bad debts as much as possible. He will have a responsibility to decrease the bad debts as much as possible, because they are going to come upon his head. On the other hand, he will be free to do credit sales, and that will help him to increase the sale. And when he will be free to do the credit sale, in that case he will be able to do more sale for the consignor. Otherwise, consignor will always be after him not to increase the bad debt, even if the sale is not increased. And that would be a difficult situation between the two of them. So we can say that Dell credit commission is provided to increase the sale by doing more credit sales. And it provides a protection to the consignor against the bad debts. So if there is any bad debt happening, that will be the loss of the consignee and not the loss of the consignor. Now we go to overriding commission. This overriding commission is allowed by the consignor to consignee to promote the sales at higher price. A consignor wants consignee to sell at a higher price than the specified price, or he wants the consignee to put in hard work in introducing a new product that consignor has sent to consignee in the market, for introducing the new product in the market. I mean, consignor wants consignee to put in extra effort. So to encourage him to put in extra effort by selling at higher price or by introducing a new product in the market, when a new product is there in the market, extra effort has to be put in to sell it because nobody knows about that product. Depending upon the agreement between the consignor and the consignee, so it will be calculated on total sales, or it will be calculated on the difference between the actual sale and the sale at invoice price if he is selling at a higher price or any specified price. It depends upon the agreement between the two parties that on what price the commission would be calculated. Either it will be calculated on the difference between the actual sales and the sales at invoice price. So we will take the difference between the sales at invoice price and the actual sales. Invoice price means the pro forma invoice price, or it will be calculated on any specified price based upon the agreement between the two. That okay, I have sent the invoice price at 100 to you, Mr. Consignee. If you can sell it for 110 rupees, we'll calculate it on 110. So 110 becomes a specified price. Or he can tell consignee, Mr. Consignee, please try to sell at any price above 100, because 100 is the pro forma price. So pro forma invoice price is 100. So please try to sell at any rate which is higher than that. I leave it to you, but please make an extra effort. Please put in extra effort. So in that case, let us say that consignee is able to sell for 102 rupees. So 100 rupees invoice thing is being sold for 102 rupees. So 2 rupees, which is the difference between the actual sale and the sale at invoice price, on that 2 rupees commission, overriding commission, will be calculated. So in order to encourage the consignee to earn higher margins for the consignor, in fact, the consignor can also offer a share of the additional profits made by the consignee on sale of goods. In that case, the consignee will get a share of the additional profits. So overriding commission can be either in form of a percentage of the difference between the actual sale and the sales and invoice price, or at a percentage of the specified price, or otherwise it could be a share of the additional profits which are made by the consignee on sale of goods also. So overriding commission is paid to tell the consignee to or encourage him to put in extra effort to either introduce a new product in the market or to sell at a higher price than the invoice price. Now, consignee can return the goods to the consignor, back to the consignor for various reasons. Like, the goods may be of poor quality, or the goods may not be up to the specimen which was sent earlier, or they were destroyed in transit, etc. While transiting, the goods were reduced in quality because of destruction, and therefore they can be returned back to the consignor. In such a situation, wherever goods are returned back, then the question arises, what is the valuation of the returned goods? How do we value the returned goods? Now, consigned goods which were returned by the consignee to the consignor will be valued at the price at which it was consigned to the consignee. And whatever expenses which are incurred by the consignee to send those goods back to the consignor will not be taken into consideration while valuing the returned goods, because goods were already in saleable condition and location, and therefore when we change the location back from consignee to the consignor, it is not a cost which must have to be incurred to sell the goods, because the costs which are incurred to sell the goods whatever costs are incurred to sell the goods are different from the costs which are incurred to return back the goods to the consignor. So, as we know that when some goods are remaining to be sold, when we have to value the goods which are remaining to be sold and which are not yet sold, and therefore when we have to calculate the cost of those goods which are remaining to be sold or the unsold goods, as we are aware that we are going to value them at the price at which they were invoiced to the consignor plus the expenses which were incurred to bring those goods to the condition and to the location of the consignee. Those costs will also be added to value those unsold goods. And therefore, the costs which are incurred by the consignee in course of the selling of the goods will not be added back to the cost of those goods which are unsold at the end of the time period. So here also, therefore, the expenses which are incurred by the consignee even to send the goods back to the consignor will not be taken into consideration while valuing the goods which are returned back by the consignee to the consignor. So in fact, they will be like expenses which are borne on the consignment, and there will be an expense for the consignment straight away. And these expenses will be debited in the consignment account, which are incurred by the consignee to send the goods back to the consignor. and they will not be loaded on to the cost of the returned back goods. Now let us go to account sales. Now, when the consignment is sent to the consignee and the consignee has sold many items during a certain amount of time, then he sends a statement called account sale. It is a statement of account of the sale made by him and is sent on a periodical basis in a summary form. So it is a periodical summary statement which is sent by the consignee to the consignor. And this account sales contains the details regarding sale which was made by the consignor, the expenses which were incurred on behalf of the consignor, then the commission that was earned, thereafter the unsold inventories which are left with the consignee, and it also contains the details of the advance payment or the security deposited with the consignor by the consignee and the extent to which it has been adjusted in the accounts, and whenever this adjustment is made, that is also mentioned in the account sales. And then of course the balance payment which is due to be sent to the consignor or which is already sent or already remitted to the consignor, that detail is also mentioned in the account sales. So account sales is basically a report of the consignee to the consignor that I have sold this much amount, these are the expenses that I have incurred on your behalf, this is the commission that I have earned as per our agreement, how much unsold inventory is left with the consignee, advance payment or the security that consignee has paid to the consignor, and how much of it has been adjusted in the accounts, and the balance payment which is due or already sent to the consignor. These are all the things that are mentioned in the statement called account sales that is sent by the consignee to the consignor. Now with that we have come to the end of the accounting in the books of the consignor, and we move to the accounting in the books of the consignee, because in case of the consignment accounts, there is a difference between how accounting is done in the books of the consignor and how the accounting is books of the consignee. So let us see how the accounting is done in the books of the consignee. Now, when the goods are consigned to the consignee, or when the consignor incurs any expenses to send the goods to the consignee, to send the goods to his location and the condition, the consignee is not concerned with that. The consignee is not concerned when goods are consigned to him or when any expenditure is incurred by the consignor to send those goods to him. He becomes concerned only when either he sends an advance to the consignor, or when he makes a sale on behalf of the consignor, or when he incurs any expenses on the consignment on behalf of the consignor, or when he earns his commission. So whatever goods are sent to the consignee, the consignee will start getting affected in his accounts, I will mean to say, when he makes an advance to the consignor, or he makes a sale, or incurs any expenditure, or earns his commission. In all these cases, he will debit or credit the consignor. Whatever is required to be done. Now let us see the entries. When he makes the sale, what happens is that if it is a cash sale, then he will debit his cash account, or he will debit his bank account. And if it is a credit sale, he will debit the creditor, the debtor, and he will credit the consignor on the other hand. So it means like he's showing it as if he's making the sale on behalf of the consignor. So he's crediting the consignor and he's debiting his bank account. On the other hand, when he makes any expenditure,
then why it is said consignor's personal account credit?
well, it is just a way of saying it. It is, of course, we don't want to say that we are not talking about a business account. It is certainly a business account, but all we have to treat it as if it is consignor's account. So it is like, if the consignor's name is X, so X will be credited like that. So he called X, that X account, and it is called personal account because you must have seen the difference, how the accounts are categorized. So when we categorize the accounts, there we have a personal account category also. When we divide the accounts into different categories like nominal account and other accounts, so in that categorization there is a personal account also. So it can be read in that fashion here, because it is an account of a person. So that is why a consignor's personal account. Personal doesn't mean niji. It is not in the same sense of being private, nor is it in the sense of a non-business account. It is just a accountancy categorization or a bookkeeping categorization of the account. And therefore, the categorization of the account is mentioned here. So that is why the consignor's personal account.
So it means that the goods are being sold on part of the consignor, so it is getting credited since the goods are moving out and the cash is flowing in.
Actually, the goods are being sold on behalf of the consignor. So
Yes.
normally what we do is that, supposing we make a sale, what we'll do is that we'll credit the sale rather than the concern, we credit any person. So
Yes.
here we are crediting the consignor straight away because it is not a sale of the consignee. What consignee is indicating in his accounts here is it's not my sale. It is for the consignor, and the money
Exactly.
that I'm getting, I'll send it to the consignor. So he credits the consignor because ultimately this money which he's getting, he has to send it to the consignor. It is the consignor's money. So therefore, he's straight away crediting the consignor's account in his books.
Basically, sir, consignee is we can term him or her as an agent of the consignor, right?
Yes, he's an agent of the consignor,
So
and he's acting
whatever
on behalf of the consignor.
whatever transactions the consignee is doing is actually on behalf of the consignor.
On behalf of the consignor, yes.
So we will view every transaction in the angle from view.
Yes, absolutely. He will. We have to look at it from that angle only, because uh, he is certainly maintaining his book, so he has to make some entries. Now, he is not making entries in the books of the consignor straight away. He's not the employee of the consignor who will make entry into the consignor books. So supposing he was the employee of the consignor, he would have credited sales account and debited the bank account. But since he is a separate person, so he's maintaining his own books. But he is an agent. So therefore, he's making appropriate entries, because whenever he makes a sale, he knows that the money that is coming, the sale has been made on behalf of consignor. So every now and then, a sale for him is not a sale, it is a credit for the consignor. he is treating the sale as if it was a credit of the consignor. So he is crediting the consignor with every sale instead of crediting the sale account. Because as soon as he makes a sale, he gets money. He gets money, he puts it into the consignor box. Let's say there is a box of the consignor kept in his office. So whenever he get his money, he put it into the consignor, and consignor can take away that money. He has got nothing to do with that money. So therefore, he is not, putting that money in his books. So to say that that money that he is getting will not be affecting his profits at all. He will be affected only when he gets his commission, and he will not be his account will not be affected in any way by whatever sale he is making on behalf of the consignor in terms of the profit or the loss that is going to be there. So this money is just flowing in and flowing out to the consignor straight away, and it is not part of his accounts at all. That is why he's keeping the consignor's account and is putting this money straight away into the consignor's account by crediting the consignor and debiting the bank account. Okay, so let's go to the next entry, and whenever expenses are incurred, again, whenever expenses are incurred by the consignee, then he will credit the bank account because he is paying from his bank account these expenses, and he will debit the consignor again because the expenses are also being done on behalf of the consignor. And whenever he has to for his own commission, in case he has to get commission from the consignor, then in that case what he should do is that he should debit the consignor's personal account and credit his commission account. So there is an error here that should have not been made, because when he is getting his commission, his commission account should be credited and the consignor's account should be debited for the commission that he is getting from the consignor. So, but if he is paying any commission to anybody else to make the sale, and that commission is the expense incurred on behalf of the consignor, in that case he will be crediting his bank account and debiting the consignor's personal account. So this commission which is mentioned here, it should be seen as if this commission is being paid to another broker or somebody who has helped the consignee to make the sale, because even the consignee can hire people as brokers to make the sale for him on behalf of the consignor. So this commission expenditure will be an expenditure for the consignor and not for the consignee. Then the third is advance paid to the consignor. So whenever he pays any advance to the consignor, he will credit his bank account and debit the consignor with that amount. That is a normal entry that is supposed to be made. Then of course,
Sir, advance pay to consignor, the bank account should be debited, right? Money will flow into the bank.
no. Money will flow. This is consignee's books. Money is flowing out of consignee's books, consignee's account, bank account, because he is paying this advance to consignor. Why he is paying this advance to consignor? Because consignor is giving him an opportunity to sell items on his behalf. Otherwise, consignor will give somebody else the opportunity. So consignee is going to make profit out of the goods that he will sell in form of the commission. So what he does is that, okay, I am ensuring you, you have given me 50,000 worth of goods. Here, take this 20,000 advance. The rest I will pay you later after the sale is made. So consignor is also encouraged to send the money, to send the goods to him, because he is getting upfront some payment immediately. Supposing sending 50,000 worth of goods, and finally and he gets immediately 20,000 rupees. So he thinks that, well, I'll use this money for my own business. So therefore, the advance practice is also there in the consignment market, where advance is paid by consignee to the consignor. So whenever advance is paid by consignee to consignor, he will pay it by way of check. And when he issues this check, he will credit his bank account in his books, and he will debit the consignor for that. So it is like, a debt being paid to the consignor. So ultimately he has received goods from him, and against those goods, after entering the statement of the sale account, statement of the sale, called the account sales, what is going to be transacted between the two of them is the money, that he's supposed to send to the consignor. So therefore, he's debiting consignor's account and he's crediting the bank account. With the money that he is sending to the consignor. On making sale also, he's crediting the consignor, as you can see here. So when he makes a sale, he credits the consignor and he pays the advance, he debits the consignor. So it is like this, that when he credits the consignor's account on making the sale, he is telling the consignor that I have to pay you this much amount. And when he pays some amount as advance, he says that out of that amount that I would be paying to you, see this amount I have already paid now. So all the payments which are made to consignor will get adjusted against the sale made by the consignee on behalf of the consignor, because on making the sale he is crediting the consignor's account, and when he makes a payment to the consignor, he is debiting the consignor's account at that time. Thereafter, let us go and look at the bad debts. For recording the bad debts, the consignee will debit his bad debt account and he will credit the customer account. Customer means the person to whom he has made the sale, because he is responsible for the bad debts, and because he has to record the bad debt somewhere or the other. So this is for recording the bad debts means that he is recording the bad debts in the bad debt account. Now what he will do with the bad debt account, that is a different thing altogether. It will depend upon whether he is getting a del creditor commission or not. But first thing that he will do, as soon as any debt turns bad, he will debit to bad debt account and credit the customer account in respect to the bad debt. By crediting the customer account, he is acknowledging that he is not going to get that money from that customer. That money is lost forever. He has no hope or expectation to get any money from there. So therefore, he will debit the bad debt account, and consignee will debit the bad debt account in his books, and he will credit the customer's account to whom he had sold this amount. then he has to write off the bad debts. So how he has, there are two methods of writing off the bad debts. One method is where Del Credit Commission is coming, and the other method is where Del Commission is not coming to him. Del Credit Commission is not coming to him. So if Del Credit Commission is not coming to him, it is not allowed to him, bad debts are not his responsibility. So he will square off the bad debt account which was debited here by creating the bad debt account, and he will pass on the bad debt to the consignor by debiting the consignor account. In this manner, he is passing off the bad debt to the consignor. Of course, when the Del Credit Commission is allowed to him, then bad debt is his own debt. So he is going to suffer the bad debt. So he reduces that from the commission that he will be getting from the consignor. So he debits the commission account and credits the bad debt account. Thereby, he is adjusting the bad debts in his own commission, thereby taking the responsibility of loss being incurred on the bad debts by himself, on himself. So these are the entries that are supposed to be made in the books of the consignee. And when we see the illustration, we will be considering almost the same example that we had started with. And now we will see in the same example how the entries are being made in the books of the consignee. And while we are seeing these entries in the books of the consignee, I'll again refer back to the books of the consignor and confirm to you the entries in the books of the consignor also, so that we'll make a comparison of the entries being made in the books of the consignor and in the books of the consignee. And that we'll do in the next session at 9 p.m. So the entire idea of taking a number of sessions is that revision should happen while going through these webinar sessions and the webinar videos. If the revision is happening simultaneously, then maximum advantage can be from, and therefore going slow and steady, one by one, trying to deal with every aspect of it. And in spite of that, we are very sure that some doubts are remaining and will remain. But we would like to clear the doubts in the next session. So therefore, please revise it and come back to us with the questions. We highly appreciate if any question is being asked. Whether we are able to answer the question satisfactorily or not, that's a different thing altogether. But questions are very, very welcome. Absolutely. Please keep that in your mind, whether your question is having any goodness, or whether the question is very intelligent question or not, or whether it is a foolish question. All kind of questions are rated by us on an equal plane, because the questions help us to clarify the topic, not only to the person who's raising the question, but also to those who will be going through the video later on, or to those who are revising it at a later point of time. So with those words, thank you very much for having attended this session, and this session has therefore come to a close now.